Hello, everybody. Happy
Hello.
Monday.
Happy Monday, Jamie and everybody.
Thank you for starting us off there, Scott. And welcome, everyone, to another edition of the Office Hours webinar. Today is the 12th of February. And I got Friday Shotgun with me, as always, Mr. Steve Gomez. We've got some interesting things and market observations and commentary and all that good stuff for you guys today. But before we get into it, just want to make the lawyers happy. And of course, most of you are already aware, but we have to do this every time, and just make sure that everybody's aware of the fact that the information that we share is for educational purposes only. So if you need investment advice, when to buy, what to buy, when to sell, all that stuff, please seek out a registered investment advisor or another licensed individual that can help you with that type of stuff. Okay, onward through the fog. Now, real quick here for the new people, not only do we have the best scanner out there for the U.S. equities markets, but we've also got a nice trading community built around it, which is always important. We've got a live trading room hosted by Barry Anderson that is getting crazy amounts of people in it these days, for a good reason, because Barry does a great job moderating that room, sharing his trading style with you, with all the attendees, and more importantly, showing how most of his ideas, if not all, are generated with the TI engine. So it's free. You don't even have to be a subscriber to get in there. So if you haven't been taking advantage of, get in there as soon as possible. Of course, today is myself and Steve. Steve takes the helm on Tuesdays for the Trade of the Week webinar. Then we like to change it up just a little bit. We bring Dan, who's the CEO, and Brad, who's the CTO. Bring those guys in, change things up on Wednesdays, always entertaining. Then Andy rounds out the 1-hour webinars on Thursday, and I ride shotgun with him. Of course, the ever popular Friday support session is what we like to call a come one, come all marathon, 3 hours from 11 a.m. to 2 p.m. Eastern time. So big hit. Any questions, any issues, any help that you might need, pop on in there. 11 a.m. to 2 p.m. Eastern every Friday. All right, Steve. Well, of course, we've got some basic stuff and some of the normal stuff on here. But as always, when markets, if we could use the CNBC tagline, of course, that changed today: markets in turmoil, or just hey, markets doing things that they don't normally do.
Markets being markets.
Yeah, exactly.
Price action being price action.
We could use a lot of different adjectives to describe the market, but we all know, hey, it's interesting. It's not the easiest hill to navigate at this point. It's definitely a black diamond if we're using the skiing analogy, or maybe even a double black diamond in this environment. But instead of me just sitting here talking, how about I pass the baton over to you, Steve, and we can take a look at some of these here charts.
Sure.
And here we go.
All right. And presto. All right, already on the spiders. So, I think a lot of people are with us on the Mondays and Tuesdays, and I'll try and kind of piece together what some of the stuff I was starting to talk about last week, but I think we've all seen this by now. If you haven't, there it is. And if you've heard people talk about markets take the stair steps up and the elevator shaft down, it's a great analogy for you. Something else buried in here that's interesting. Some of the biggest rallies and the biggest bounces that the markets can have, for lack of a better word, are bounces that are coming in bear markets or even corrective type phases. And you can see this was a mother of a bounce here. This was the 6th last week. So Monday, Friday, so this was Tuesday of last week. Really nice bounce. And then looks like we had the following day. I'm going to zoom in real quickly so you can see this. This blue line is my 50-day moving average. The price followed through and then got caught just above that moving average and then sold off and closed on lows. then subsequently the next day closed on lows with giant volume, I might add. And then the big reversal on Friday is this particular candle right here, and we've kind of popped back up into the range. Well, volatility, no short of it, no shortage of volatility. Look at the small candles we were dealing with day after day, doji, and now we've got some volatility. The volatility is back. And so just one of the things that I've been preaching when we get like this is get small, like Steve Martin used to say. Just get small. If you're trading 1,000 shares, go down to 300 or 400. If you're trading 500 shares, go down to 200 or 300. You can control your share size, and it allows for a lot more volatility and a lot more elbows to be thrown at you and not get tricked and stopped out of this volatility. But in the bigger picture today, we had a bounce on 1.4 relative volume. So you can see that volume candle, not as big as the reversal candle. Remember, a lot of this candle on Friday was selling down below and then buying it back. So definitely no shortage of volume. We've got a lot of volume to work with here. But what I started to talk about on Tuesday on my webinar, Trade of the Week last week, was the real test of this market is going to be what happens. And when I was speaking about these moving averages up here, the 10 and the 20 haven't crossed yet. I said they're going to cross. That's a foregone conclusion. And these are going to start to come down in a heavy, heavy downward slope. Well, the real test to find out, guys, if this was a correction or if this was just a wonderful opportunity for another dip buy. Two different scenarios. The dip buy scenario means that we're going to push back higher and hopefully challenge highs maybe in the spring. If this was in fact a correction and it's not over yet, here's where we're going to find out where the rubber meets the road. As this 10-period moving average crosses down, probably in the next day or two, we're going to meet the underside of these 10 and 20-period moving averages. And I'm going to start to watch. Well, the first test last week with the blue line, the 50, we failed it. We failed that last week. So the 10 and the 50 are kind of converging here. We're going to get a point in time where we see, is the price action going to blow through and close on highs up back above through these declining moving averages? Or, which is the more likely scenario, in my opinion, once we have these crossovers and we have a lot of selling on high volume and distribution here, we call it bouncing into the pocket. And you've heard me use the term 3 days on a pullback. Well, if this market's flipping upside down, then basically 3 days of bounce right back into the pocket. And that is where the rubber is going to meet the road, guys, when the price action meets these declining moving averages, starting with the 10-period first. If it can't get back above that 10-period, and we notice that it trades above and then closes back down below that 10-period, that could be an early warning system, an early warning flag that we're not done yet with some of the selling and some of the volatility. What the bulls are going to want to see is the price action fighting through these daily moving averages and then closing at or near highs above them, one by one. So again, the real test of this market is going to come up here real soon. Right now, we just have a couple of relief bounces, but where do we go from here? And when we bounce back up into that pocket, if we hold a firm bid and don't sell off and roll back over, well, then maybe this was just a correction and it was another dip to buy. But if we start to roll back over and close on lows after a day of attempting to breach those declining moving averages, that's going to be extremely bearish. All right. So spiders 144 on the relative volume, a little bit of a relief bounce today there. Take a look at the Qs. Very similar. You got the declining moving averages. We're still below the 50. They rejected the 50-day moving average on that same day in the NASDAQ. So let's see what tomorrow brings as we kind of bounce right back up into the pocket. And the close is really going to tell us a lot. A big long tail to the upside and then closing on lows under the moving averages. That's not going to be very bullish. And then the Dow is kind of just going back and forth down here, and again, also below all of its key moving averages. So we're going to find out in the next day or two, guys, when the rubber meets the road here on these moving averages, what exactly the price action may want to do. I saw somebody briefly mention in the question box there, the VIX. It's not pulling back with vigor like it has in the past, so it's kind of hanging out up here. This is also something you can keep an eye on, and if the market, continues to go higher on low volume, but the VIX isn't quite pulling back, well, then there's still some frightened people in there that are buying protection for another possible down move. So we shall see. And then I forgot the IWM. The Russell's kind of the weakest of them all, basically way below their moving averages and just chopping sideways. I've used this 10-period moving average on the daily chart to talk about, you know, the guiding hand that guided this market up on the daily chart there. And then once we breached that, well, underneath that 10-day moving average might start become the guiding hand that keeps the hand on the head and not letting the price action move higher. So I know I've repeated myself a few times on these declining moving averages, but when these price actions meet those moving averages, that's where I think we're really going to find out what this market is truly made of. Anything else that I'm missing that you can think of, Jamie?
No, it's you know, we've been waiting, or I guess, you know, people have been thinking that something like this was going to happen for a while, and of course, you know, it's not a matter of if, it's always going to happen. It's just when's it going to happen. And then being a person who's been an avid follower of the crypto markets, you know, we just had a correction crash in those markets. So to be seeing another one unfold, but this time on the equity markets, it's kind of strange, but it's weird to have that feeling two times consecutively, you know, coming this close together. You know what I'm saying? So it's like, ooh, I've been here before and just not too long ago, which is a different kind of perspective, I guess you could say. In any case, one thing that we can be assured of is, you know, there's going to be a lot of opportunity, whether the majority of it's to the upside or the downside, or it might be a nice mix, kind of like what we saw with Holly today. Who knows? But should be.
This is definitely action that a lot of people are not used to seeing. So tread carefully, you guys. Things happen twice as quick, twice as effective. So that's why I was saying you can control your downsize, your share size, and you can downsize your shares a little bit. And trust me, that'll make it not as nerve-wracking and like you're riding a crazy roller coaster. You can control your share size, and that allows for more elbows to be thrown. So, all right, well, that's all I've got on the general markets. If you want, I'll send it back.
Thank you very much.
A couple questions here I'll take a look at.
Yeah, and you know, a user's asking about showing some alerts on the 20-minute moving average on a 1-minute chart. That kind of sounds like a configuration question. So we might not, you know, necessarily have time to try and address that during this.
Yeah, if you could just send that to info@trade-ideas.com if it's possible, and I don't know if it is, but if it is, we'll have somebody take a look at that.
Exactly. Okay, so you got eyes back on my screen, right, Steve?
Yep.
Okay, perfect. All right, so thank you for the recap on the technical stuff there, Steve.
And David pointing out the compare count windows have been pretty weak too. I'm sure you know all about that.
Right, and just kind of strange. And we'll get into that in just a second here. So, you know, as it sits, green for now. Everybody feels maybe like taking a deep breath. Who knows? I know that when we were experiencing the same cycle in the crypto world, after a nice beating and you get a green day, everybody just kind of takes a big sigh of relief, depending on, you know, how much exposure you have, obviously. But green for now. Is that the case moving forward? Well, today's Monday. We got 4 more days to sit and watch and interact. Okay, so the expectations that unfolded, you know, for me in real time this morning, once again, keeping in mind that we're not in a quote-unquote normal market. We're in a very interesting market, as Steve laid out on the charts there. So, you know, when we're in this type of environment, you know, hey, the seas are choppy and the waves are big, you know, we want to be pretty much batten down the hatches. Of course, hey, not everybody's like that. Typically the way it is the younger guys, you know, I mean, they're banging away. There's a high volume time, but for, you know, people who aren't professional traders sitting in a prop firm, you know, there's a lot of opportunity to the up and the downside, as there was today in these markets, but difficulty level can be a lot higher, and a lot of the times if you're wrong, that move against you can happen, man, really quick, especially in these types of environments. So my mantra coming into this week, as just like Friday, is super selective. You want some real happy, snuggly feeling on that whatever support line you might be playing on any time frame, right? And then hopefully some market correlation like we had today with the bottom being put in for the short term. But been noticing some strange divergence between the smaller caps and the larger caps on the compare counts, as Dave was pointing out, kind of strange readings. So check these numbers out. These were the compare counts 15 minutes into the open today. And of course, let's just pull up the SPY here in the background just so we can know. And I've kind of put a little arrow right here. These are the 5-minute candles, 5, 10, 15. So right about here is where these readings came out. And of course, on the big cap side, companies with a minimum market cap 4 billion or higher, and then 5.4 billion over here, so we could just say 4 billion as a minimum. A pretty strong, bias to the green side. Of course, as we had last week, completely different readings over here for the smaller caps, 4 billion and under. Actually, slight red bias here, slight green bias here, but both very different than what we see over here on the big caps. So once again, another kind of warning sign saying, okay, when we don't see, unity across the board here as to the green or red bias, something's kind of strange. We don't know what it is, but these are not the readings that we're used to seeing most of the time. So once again, what does that tell me? How to prepare is cautious, all right? Things can shift around at any moment is what this is telling me. Now, of course, we did have, what do we have right after that? Once again, a nice swoon down before the larger move back to highs, and then, kind of a strong finish. Of course, everybody's seeing nice shades of green across all the indices or the ETFs that represent the indexes today. And that's better than red most of the time. But, keep in mind it was a gap at the start, and, we did have a slight filling and then a bounce back up. So see what happens tomorrow, but weird readings to start the day. All right. And of course, market conditions just in general based on what has happened, we're going to be cautious. Then we see things like this happening. So that tells us to even be more cautious, getting that little read, that little tell 15 minutes in. Now, one more thing I want to point out before we get on to some of the Holly stuff here is a lot of you have probably heard about my pack leaders and pack losers top lists, which most of the time the pack leaders has been just jam-packed. Of course, no big deal to see it only have 2 stocks on there today. And one would think, well, since my pack losers list was pretty packed a couple days last week, Thursday and Friday, that maybe it would be packed. So this even telling us and reaffirming that we're right in the bounce middle. If Steve and I were talking about this before the webinar started, if you take not the little dribble down days here, but the high here and the low here, 30 points in between the high and the low, and we're right about 15-point bounce here. So we're right in the middle, and this is reaffirming that because hardly any stocks at all-time lows, hardly any stocks at all-time highs. Once again, kind of a buoyancy test there, or reaffirming, letting us know that, yeah, we're right in the middle here. So, keep the powder dry, be very selective. This is the market where you can sharpshoot and pick some cherries and do well, but we don't want to go on a trading binge. It'd be very, very dangerous in a market like this, and as Steve was alluding to earlier, scale back that share size as well. Okay. So keeping in the same rhythm here, we should be cautious. We should, really, it's time to exercise. Not only, we have to maintain that discipline all the time as traders, but, when you're on the double black, you want to be very careful, because you misread one of those bumps and you go down. It's going to hurt a lot worse than if you're on a green or a blue, right? You just slide over and stop and get back up. You hit one of those bumps, it's a different story. So I really loved the way Holly performed today, because what happened? Well, number one, see, if I'm getting all of that information 15 minutes into the open and making, going through all those processes, getting myself ready for the day, and then the night before or the morning of, depending on when you look at Holly, but, after all the analysis was done back on this day, we see Holly coming to the party with only 6 strategies on the starting bench, which isn't the fewest that I've ever seen, but that's definitely in the lower strategy complement.
Yep.
On the high times, you can have 14 or 15. So to see only 6, only 4 longs, well, only 2 shorts, I should say, versus 4 longs, that's another kind of, a tell, an indicator. The AI, after all this analysis, even after folding in all this craziness, still not seeing a plethora of alpha, but still seeing some. And of course, only 3 of those strategies fired today for a grand tally of only 5 trades. In this market, I could not be happier with her risk on performance today. And the simple fact that she kicked out mainly short trades today and only 2 longs, which is another thing that very rarely happens.
It's been a while since I've seen a big winner that big on the short side. I'll tell you that.
Exactly. So, we're seeing the deck start to stack a little bit differently as Holly, is able to fold all of these days in and start to try and make some sense out of it. So she performed just like these things that I was gearing myself up for would tell us human traders. Very few trades, try to pick the most selective ones based on whatever merits you look for, which are all the same for most traders with a few differences. And that's exactly what we had Holly doing today. She didn't jump right in. First trade didn't kick off until about 37 minutes into the market at 7:07 Pacific Standard, 10:07 Eastern. And we had a nice little, smattering here, but predominantly short trades. Of course, the biggest, oops, double click too soon there. Biggest winning trade today, risk off and risk on, this beautiful short that Holly generated right here. And for the people that might be seeing Holly for the first time, notice when I double click on her trade blotter, it populates my chart with all of the key data here. Stop loss over here on the top with the red, profit target, and the entry price corresponding with the arrow corresponding with the proper time. So a nice beautiful entry there from that nice little consolidation area. Sellers come back out, she generates the short signal there, and it was pretty much a painless trade in the fact that it never really moved against us. And we got to enjoy that green status pretty much right off the bat. And I'm sorry for the noise pollution here. Hopefully no one's hearing the helicopter too loudly.
Not bad.
And with you, Steve, it's jet fighters. With me, random helicopter.
Jet fighters and lawn blowers.
Okay, well, good to see my noise canceling mic is actually kind of doing its job. All right, so we got the very nice entry here, and then just a continuation. Course sets up again a couple different times here. If you'd like to add to the position, these are times where we can sometimes do that. Now, once we got going here on this one, of course, these little wicks here kind of throw the chart off in the opening 5 minutes, and then this one too. So for using absolute lows, Holly calls it right here. We get some nice pain-free action on it. Of course, we can see the shaded area right here is Holly getting out of the trade in risk-off mode, in which she books 71 cents because the timed exit played out. and that's what she's programmed to do. Of course, not only is this a great winner, but it's also a great example of choosing to stay in a trade and take a little bit more risk, go what we call risk on, just simply because you think there's more meat left on that bone. And that's always going to be based on the chart pattern that is playing out here. So we see Holly calling the time to exit right here. Of course, somebody might be asking, how do we know what that time was? Well, to get that information, we would just look at the downward dog strategy. It's right here, and it's configured around a 60-minute hold time. So Holly's profit target or stop loss had not been hit. The 60 minutes expired, and she bails on the trade because, well, that's what she's programmed to do. Now, we're still in the trade where we see Holly exiting, and we're like, well, it's working so far. Now we're just getting another one of these little consolidation periods like we had kind of soon after we got into the trade before it released for the first time since we were in it. Now it's doing the same thing. I see Holly getting out. I think to myself, well, I'm just going to tighten my stop up to maybe this bar up here, but I think there might be more left in it. And of course, a handy guide for that, trying to discern where it might go, how much room might be in the trade, is consulting the daily. So when we can see the blue box right here corresponding with when Holly called it to get short, and then we could easily go to these wicks right here or the top of this area right here, and we can see you know, it stayed below there and even pushed further down, right? So you know, a pain-free trade pretty much all the way. And of course, new traders trying to figure out when it is appropriate to add to a winning position. Once we had this little consolidation again and then a breakdown once again, that's a great little continuing range break corresponding with way back here. That's also an excellent time to add to a position. And you know, this one maintained pretty stable levels today, with the seller being obvious in hindsight, but not pushing it too much at any given time, taking it down kind of like a good market maker should. If all charts were like this, wow, it'd be it's never easy. But anyway, not to keep on talking about how nice of a pattern the LJPC was today, but it was a good one, and it was to the short side. So who knows? We might start to more of these.
What moving average do you have there? Is that the 10?
That is the 10 period.
Notice how I mentioned earlier the 10 period on the daily chart is the guiding hand that drives momentum price in a certain direction. Well, it just so happens to work in the intraday charts as well.
Yep.
There's about 5 or 6 touches I can see there on that declining 10 period moving average on the intraday chart. That's the momentum line. I call it the momentum fast line, because if a stock's going to stay in momentum, either up or down, that 10 period moving average is going to be the guiding hand that either supports it or keeps a lid on it.
Yeah, Steve, mysteriously, my information up here in the upper left-hand corner has left the building here. Let me see. Still got a little crosshair bug in there.
Yeah, you said that last time too.
It was working earlier, but oh well. Anyway, yes, so great trade in that one. Now, we did have a couple more today. Now, the BRKS did run a stop on us today. So we can see when Holly called it right here, quickly stopped us out. Of course, you know, some people like trade around, some people don't. But I would be remiss if I didn't mention the fact that the statistical probability is good for the day, right? Sometimes the timing is off, which results in what we see here, which is a stop loss, right? Now, of course, every day is different. But if we look at this little bottoming area, once Holly gets red, and of course, you know, maybe you're watching Holly intently. Maybe you're not. Maybe she's just another window that you have up, and you observe her in rotation along with your other windows. But I know a lot of people out there probably were sitting there today. They looked over at Holly and they saw BRKS red, right? in the money, and I mean out of the money, and then eventually a stop out. Well, if you attend the webinars on the regular, then you probably hear us talking about using the price alerts for second entries. Well, in that case, she gets stopped out, but eventually, and of course, a lot of this might be determined on the bounce that the spies put in right about here, right? But in any case, you know, each day is different. You know, had you set that price alert for the second entry, you would have gotten alerted with your price alert right about here as it poked through, or right about in this area right here, and we can see there was some additional upside opportunity left because, hey, things change, the market had a bottom, and sometimes second occurrences work, right? So once again, just another way to use Holly as a high quality information window, because I'm sure there are some hardcore statistical people out there that are literally taking every trade because they're playing that long-term statistical, you know, casino type odds. But then again, a lot of people are waiting for a nice chart that they like to couple with the statistical probability. So to each his own. Steve.
Yes, it's an art form. It's not a science. Everybody approaches it differently. I just thought I'd take a moment to acknowledge Blair's question. We talked about moving averages, and for anybody who doesn't know how to add some indicators, you could take a minute and show real quick.
Sure. So just adding an indicator to the chart then. I'm just trying to grab my chart here because I wanted to expand it, but it won't let me. Okay, well, we're just going to leave the chart that size for now. So for example, I've got one moving average here. If I right click and I come to indicators, I can create a new one, or I can pick any of these. If I wanted to, let's see, I've got my volume, which you can, you know, clearly see down here, and then I've just got my 10-period SMA. So if I wanted to add another one, we just come down here and pick what we'd like to add. So if I wanted to add a 200-day, we can do it like that. I usually just click right into it for the first time and then come to modify.
All right.
So then I just come down here, I added the 20, and then I'm just going to add another 0. Let me see what color. Maybe I'll make that red. I come up here and select the color, click a nice color, paint that color up. Put a nice
Every time we open up these webinars, I'm seeing like one more indicator. So the developers have been busy and adding slowly additional indicators as we go.
Right.
So,
of course, it's going to look kind of wacky on a 5 minute.
yeah, 200 period on a 5 minute.
You know, hey, whatever. But that's the way.
That's how you do it.
That's the way you do it. Mm-hmm.
Sorry if I caught your flow there. I just want to make sure that question did get answered.
Not a problem. Not a problem. It's good to mix it up. Keeps me on my toes. So you know what I was just talking about is a trade around. You know, you see Holly at a disadvantage. Look at it as the same way that Steve and I and Andy and Dan and Brad reflect on it. We reflect on it like it's the guy that we used to play off of when we had to go to trading offices. There was always the guy that just, he just knew he was never going to make it.
Let me put it this way. Every office had a Dennis Gartman, and we all keyed off of him.
Right. You see that guy in a short of stock, and it just won't go down. And there's Goldman Sachs hanging it up on the bid and won't leave, just sucking up shares, but only showing 100. You know what's going to happen. In a matter of minutes, that thing's going to turn and burn the other way. So what are you going to do? As soon as you see that, you're going to get long. This guy's going to be scrambling to cover. What are you doing? You know, if it weren't for that guy, you'd never be in that trade to make that money. Well, do the same thing with Holly. You know, sometimes the timing is going to be off. Sometimes it's going to not get stopped out. It's going to go down and barely almost get stopped out, which is another interesting observation because I forget which one it was, I think on Friday, where it's just like me, anybody else that's been trading for a while knows, you know, you set a stop loss, they get you out by a penny, literally, and then snap it back, and next thing you know, it would have been a winner. right? Well, sometimes you can see those happen in real time and go, huh, I can get in here and risk a few pennies, and while everybody else is either getting stopped out or, all it's doing is showing you, hey, this thing that's happened to you, sometimes you can actually profit from it if you see the setup right, and it looks good on the chart. So I digress. So trade around in BRKS. The showstopper today was a short trade, LJPC. The majority of the money was a short trade. And the interesting thing to point out on 3 shorts and 2 longs on a day like today where it was green all day is that at the end of the day, they were all in the green with very little fluctuations in between.
Which brings up another topic you and I briefly touched on earlier, is the risk on, risk off flag, and how that can work for you guys that aren't maybe even in a Holly trade. Maybe you're in your own trades and you're wondering, should And so maybe you're long a couple of your own stocks and you're just kind of wondering, well, that's kind of a beach flag marker that shows where the currents and the winds are blowing. If you've got a risk on day where the Holly trades are just continuing to profit going into the close, well, that's probably going to be true for a lot of stocks in the market for the day. So that can be a nice bellwether indicator, even though it has nothing to, even though you may have nothing to do with some of those individual calls that are coming out of Holly. I just want to remind people that risk on, risk off flag can be a nice bellwether for what you want to do with some of your trades if you have some.
Absolutely, and I keep asking for this in future versions. When are we going to be able to expand this chart and maybe even mark it up like a regular, chart? Because when you see the AI take off like it did, and then it tops out, it goes sideways for a little bit as far as P&L, and then boom, it breaks out. I mean, that tells you the momentum is strong, that tide is coming in, and today's one of those days where just about all the boats got lifted up. Nice and green, and we'll see what happens. But that's a beautiful curve there. Haven't seen something like that in a while. Okay.
Got a couple of questions if you want them.
Yeah. Which one should I get started?
Starting with David.
Okay. Do you think Holly chose those first 2 because of their movement over the last several days seem to be moving sideways versus the volatility? Is she confused on what to trigger? Well, David, the question is, why did she select these strategies? I take it, right? Well, let me give you a little idea of what's going on behind the scenes here. Now, keep in mind, when you're in AI, you're folding in data from many days, right? And when activity like this comes into play, there's a little bit of catch-up before a system can attempt to try and make sense of what is going on. Now, 6 strategies made the cut for today's session, all right? Not including today's data, but folding in that bounce candle. Now, Holly is analyzing a strategy bank of about 45 strategies, give or take a few. Some are always being added, some are always being removed. But those strategies are huge sample sizes, maybe 40, 50, 60, maybe even 70,000 trades over a 2-month trading period, 40 trading days. And so there's an enormous amount of heavy lifting going on behind the scenes every day after the market closes, almost right up until the next open. And only the strategies that meet the minimum on our proprietary scoring system are the ones that are going to make the cut. So no, I don't think Holly's confused. I don't think that's what the performance today tells us either. So I hope I answered the question there. Or did I misunderstand it?
I don't know. I think he was saying, was it just eyeballing those couple trades, the first couple ones, does it look like they were coming out of, consolidation periods? What I would suggest is, look at the strategy. So the first couple trades of the
first
day.
Two trades. The first two trades.
Yes. So the first one was on support, and the second one was downward dog. What you may want to do, David, to get a great understanding is go to the website footer at the bottom of the web page. Under frequently asked questions, there's something called AI Holly strategies, and we give you a thumbnail.
Yeah, just show everybody how to get
a thumbnail of what those are. And so, you could read through that thumbnail. We try to, show what some of the filters are looking for. And if there is, a component of breaking out of a sideways range, then, perhaps that might have been part of the reason. But
so apologies, I kind of misunderstood the question there. Hey, well, you got a quick education or a refresher on how Holly works there. But as you can see here, I'm scrolling through all of the strategies here.
Yeah, and those should give you a good thumbnail of what they're looking for. Specifically to those first two, I really wouldn't know. Bullish pullback is looking for pullbacks, but other than that, I don't have the filter breakdowns.
Right, and everybody just keep in mind, you can click here and download the PDF and just keep it on your desktop for easy reference, or just bookmark this part of the web page.
Also, I'll just jump in for Jeffrey's question. Risk on and risk off. Risk off is the AI exiting for one of 5 reasons: time stopped, profit stop, profit target, reduced risk, which means the trade's not going anywhere, or just cut it early before the time clock. And the last one would be profit save, which is like a trailing stop. So risk off is when the AI exits the trade for one of those reasons. Risk on is simply keeping that symbol open into the close to see if there's a lot more meat on the bone. And today was one of those days where risk off was kind of, taking, dimes and pennies, whereas risk on was letting things mature and letting profits soak in and marinate and deliver a bit more using patience and time.
Yeah, and let's take one more peek at the LJPC chart. Let me see if I can do this in a manner that everybody, or that might be helpful here. So let's pretend for a moment we were in 200 shares here, and we're like, yay, it's working. Yay, it's working more. And then we see Holly getting out on risk off mode. My time's up, I'm getting out. So a real good habit to get into is just do a little bit of both. Go, you know what? I'm peeling out of 100 with Holly here to book my profit. This chart, in my opinion, looks great. It looks like it might be setting up again. Of course, it did, but you never know that at the time. We can use this to try to temper expectations. But in this case, you plucked out of 100 with Holly on risk off, so you booked that profit. A good idea is to set the stop loss on the second lot is at a break even. If it rolls back over, you don't lose money, you still made money on the first lot. And if it keeps going, you went risk on the second lot and it paid and you made more. So that kind of helps demystify it a little bit. Do a little bit of both. Get in the habit before long you're you're clicking along and making those decisions quickly. Hey Brian, real quick, I just saw your question pop up. Not possible. What you're describing is container mode, and we do not have that.
I do want to add, though, you could move it to your other screen by just moving the toolbar to your other screen, then clicking Save Layout, and then the next time you open up the product, it'll be on the other screen. The second thing, and this is one of the reasons people ask for the container windows, maybe Jamie will demonstrate it real quick, Brian. This is what I was typing. Jamie, grab that toolbar and click the Minimize button, and you'll notice that all of the windows follow to the Minimize tray. How to restore all of those? Well, locate the one that's the toolbar. It's usually at the top with the icon, and restore all. They all come back together. So we don't have a container window, but there are workarounds for minimizing or moving your windows easily to another monitor.
Very good, very good. And just keep in mind, wherever you park your windows and save your default layout, even if it's on multiple monitors, they should all open up on those respective monitors. We just don't, and we get a lot of requests for the container functionality. I know they're probably working on it behind the scenes. Wouldn't be surprised if it showed up at some point in the future. I just don't think it's on the front burner at this point in time. All right, so we've still got a couple of minutes left here. Steve, anything you want to add, or do we want to just keep on taking some questions here and see what comes through the pipeline?
I don't have much more to add unless there's another question or two that comes through.
Yeah, I'm just going back over the itinerary here. I covered everything that I wanted to. And of course, you know, we're going to do some of the same old stuff that we always do in these webinars, ladies and gents. But when the market's like this, you know, kind of all bets are off for the meantime, because it is some pretty, you know, this type of action doesn't come along very often. So we're all sitting here and participating, and we've all got front row seats. So if there's
the VXX, the bulls are going to want to see that pull back, you know, more than it did today. So if that thing starts to get red and pull back again, that's certainly going to help the bulls. But once again, you know, my theory is the next day or two, we're really going to find out what this market's made of when it runs right smack into those declining moving averages. So
right. And then
that's what I'm watching.
you know, we gotta throw this one up here, because we haven't had an office hour since this debacle happened. But man, I mean, when you see instruments do this, right? And this isn't a stock, this is a ETF, triple inverse volatility, right, Steve? And you know, it closed up in the 90s and then didn't even open the next day, and is now flopping around at 5. Wasn't really ever supposed to do that, I don't think, but I think that if you read the fine print,
on page 27 in the prospectus,
they got you on the fine print. It's just like the South Park.
The absolute value is 0.
Yeah,
I think Nanex found it.
Apple iPhone iOS update. You know, it's like the South Park episode. But you know, buyer beware goes. You know. There's always been, well, an undertow of commentary in the securities industry about, hey, look, if you're an investor, you don't really want to hold an ETF, right? And this is the reason why. You know, they're great for trading, but as far as holding them overnight, well, everybody always thought something like this might happen, and XIV was the first one to actually do it. So just wanted to kind of throw that one up there for.
Yeah, 4.2 is the most recent beta version, I believe, until further notice. And then lastly, I think we could end on Kevin's question. Can a strategy be created for a specific security using an index scenario setup? Thus, 5-minute SPY must show some overbought or oversold. Well, we can set up a 5, a 15, I think a 30, or maybe even a 60. We call it a market filter, but it's some change in the S&P 500. So you could look and use the filter for the change in the S&P 500 on the time frame that you want. Whether or not that's overbought or oversold is up to you. There's your library of options right there. So that means, like, if I have a new high in my alert, but the S&P over the last 30 minutes is not positive, and my filter is set that it needs to be positive, I'm not going to see that alert. So yes and no. We can, you know, have market filters that look at the time frame and the positivity or negativity of the S&P 500. But it's not going to give you an overbought or oversold reading. And the other one is, yes, a price above or below a moving average line. That's another filter. So both of those filters would be satisfied. The market filter and the moving averages that we have to work with are primarily SMAs on different time frames, but you can use the filters of minimums and maximums to make sure that the current price is either touching or very close or just above or just below the moving average in question that you're looking for. So right. For the most part, your question, it can be done. It's just up to you to decide, you know, what's overbought and what's oversold.
Yeah, and you would just point the respective window to the single symbol by using the symbol list tab.
Oh, great question to end on. How can you tell if a stock is an ETF? Well, if I wasn't sure and I typed in a stock symbol, go ahead and type in XLF for exactly.
Okay.
That single stock window down there is going to show you what? No earnings, No fundamentals, no earnings date, no earnings per share. Earnings per share is the key, basically. The EPS data window is empty.
Right.
So, and then if you also read the title there too, that single stock window will give you a lot of information just from typing stuff in.
Right. So easy enough with the single stock window.
Yeah, VXX, ETF or ETN, I don't, jeez, I've heard both. I really don't know. I know XIV was an ETN, and I'm really not even, I don't think I'm able to pull out the definitions of why an ETF differs from an ETN. I just know they're tracking instruments. Some of them are levered, some of them are not. Some of them have contango, some of them not.
Yeah, they're mirror instruments or based on a basket. Everyone's different, so you know you can always. I'm sure that information is out there by the.
I don't know, Philip. I'll probably be doing a Google search. I'll be doing a Google search because you got me curious now after the webinar's over, and see if I can learn the difference.
Yeah. So okay, I think we better get Scott in here before we keep him from his task at hand.
We got a good promo to offer.
If you were there, Scott, we are ready for you, sir.
All right, great. Yeah, we've got several things to just mention. We'll kind of go through these. So it is a good time to put this book in your wheelhouse. And I should have corrected that ebook to be a lowercase b. I'll do that for the next one. But yeah, tradeIdeas.com/ebook, all lowercase, will take you right there. Just go ahead and download that. It'll give you some plays to take care of your protect yourself in the downturn that we've been getting teased with. It's a good book. Jamie and Steve and Sean and Andy all participated in sections of it, so do check it out. If you're an Interactive Brokerage client, you should be trying the IB Brokerage Plus. Keep that in mind. We have a podcast. New episode was up last Friday. Make sure you're subscribed. Trade Ideas Podcast. Just search for that in whatever podcast app you use to listen to podcasts in. You can find it. Listen to the last one. And there you go. And also, very important, Wednesday, price hike. So we are increasing our prices across the board by about 20% on Wednesday. So you're going to want to lock in the current rates. And the current rates are $99 or for standard monthly, $188 for premium monthly, $888 for standard annual, and premium annual is $1888. Those are the rates you're going to want to keep moving forward. We're raising the rates by 20%. We've added a lot of features, and it's overdue. So the good news is if you're currently a subscriber, when that happens, you continue paying whatever rate you've been paying for as long as your subscription's active. We have people that are still only paying $40 a month. They've been with Trade Ideas for 6 or 7 years and never let their subscription lapse. So they're getting a fantastic deal. There is a code that is good until midnight on Wednesday. Actually, the prices go up on the 15th, which is Thursday. So it's Wednesday night at midnight is when the prices actually go up. And this code is good until that happens, Love Change, and it's our Valentine's code, and it gives a nice 23% off. So this is the opportunity to lock in your 2017 rates, the low rate, using this code for your first month or year, and I recommend the year because that's your biggest value there. So lock in your premium year at $1888 for renewals and save 23% off your first year of that. You just use the code LOVECHANGE, all caps. It's good through midnight on the 14th. We have another code that's also good until the end of the month. So if you're a little tardy on using the holiday code for Valentine's Day, Holly is Love is good through the end of the month. But remember, even though that's 15% off, you will be paying that 15%. You will be saving that 15% off on the new rates, which will be 20% more expensive. So please take the opportunity to consider taking advantage of this price change to lock in the 2017 rates in perpetuity as long as you're a subscriber and save the big 23% off the top. All right, guys, if you have any questions about this, you can also download the handouts, the handout panel, and you go to webinar interface, just expand that, click on that blue link to download the PDF before we turn the webinar off in a few minutes. Or you can just email us, info@trade-ideas.com, with any questions. Make sure that you've got our social contact stuff in your feed so that you're following us on Twitter and Facebook and all that good stuff. Again, just shoot us an email if you're confused, and we'll have a recording of this up later on tonight or tomorrow morning, and you get an email reminder about where to find it. Thanks, everyone.
All right, thank you.
Thank you very much.
All
Thanks
right.
for popping in, everybody.